Kenneth Weissenberg. I'm co-chair of the real estate practice group at EisnerAmper LLP. We're a full-service accounting firm with major specialties in both real estate and private equity, and this showcase highlights both areas of our firm. Today's event is a bringing together of the top thinkers in real estate. We have both the speakers, we have 55 of the top speakers in the country coming here today to share their insights. And we have an audience which is close to 600 people, of which 500 are top-level executives at real estate funds and private development companies. It's a great opportunity for people to get together, learn from the best, and meet each other and network and create business opportunities. The panel was on what's the weather out there, and we had some really great guys on the panel, from Harry Macklow, who's developing 432 Park Avenue, to Joe Sid of Thor Equities, Dean Adler of Lupit Adler, Glenn Rufrano of O'Connor Properties, formerly head of Cushman & Wakefield, and Jeffrey Horowitz of Proskauer. Brilliant men. And the panel was just lively, a lot of back and forth, and the general consensus is there's clear skies ahead, at least for the next 3 years or so, with a chance of towers.
So today we spoke about the conditions of today's environment, what are the opportunities going forward, and what are the obstacles or what are the winds that may be going against us versus at our back. So I think the real estate marketplace has become more institutional, that capital is now organized, backing good operators, and is much more prepared to make investments, particularly opportunistic ones, than they may have 15, 20 years ago. So there's been a significant improvement in private equity and institutional capital for the investment in the real estate class.
I will be speaking on the foreign capital panel and discussing how we source our foreign capital and really what is the appetite of the foreign investor into the U.S. real estate market. I've attended Green Pro events before, and I think they're very high quality, and it's an honor to be here as a speaker.
I'm going to be moderating a panel that talks about deals and how difficult they are to find now in the tightening market. It's certainly been morphing over the last number of years, and they've gone from focusing on primarily deals that would work for them, and understanding that in a tightening market that they're going to need to begin to stretch, whether that's into different property types in different markets, or in being more aggressive on the terms they're willing to offer their sponsor partners. So I see that changing, and it has changed the face of real estate for sure.
I was on a panel talking about alternative financings available in the commercial real estate market. We spoke about both first mortgage lending, mezzanine lending, fixed floating, just a general discussion about what types of debt capital is available for owners of commercial property in the U.S.
So I'm speaking on a hotel panel called Rooms with a View. We're going to be talking about the health of the current hotel industry, different strategies in terms of communicating with your guests and how to attract business, and the future of the industry, how to capitalize investments, both construction and existing assets.
So today I attended to speak on a panel about value add versus core investments in New York City. And being a broker here in the city, it's always great to get out in front of a crowd and talk about some of the opportunities that we're seeing. And today on our panel, there was actually some really great discussion about opportunities in the boroughs. So we spent a lot of time talking about that, and also foreign appetite for investment in the city. I think that the way where it's focused, I think, changes. So traditionally, I think a lot of the private equity was focused on Manhattan. And I think now, especially with the types of returns that these funds are looking for, that they do need to consider the boroughs and different asset classes.
I think the first overview was focused on direct investment in property in U.S. by foreign investors. It was clear that the surge has been led by the Chinese, and they're eclipsing those other investors like the Russians or European. Second, the capital in part is due to flight capital for safety, and also to other extent for immigration purposes. And third extent is to diversification, because places like China, places like Brazil, places like Russia is getting more and more unstable.
Today was about foreign direct investment in the United States, specifically gateway cities, New York City, Chicago, Los Angeles, San Francisco. I was actually the moderator, so I didn't speak very much, but I certainly listened a lot, and I think I learned a lot from my panelists.
I think the role of private equity is vital in today's real estate market. I think lenders learned a lesson in the last crash that they're not lending in the same level that they were before. So they're basically lending at a 70% loan-to-value ratio. The developers are not equipped to come up with the full 30% of the equity, and the private equity funds are perfectly suited to fill that capital gap. It was a great opportunity for us to put this conference together. I want to thank Green Pearl. I want to thank Harry Dublinsky, Kristen Lewis, Kathy Williams from my firm for helping put this together and making this just an incredible day.